When do I stop buying silver and gold? These are my 3 requirements. Hey everyone, thanks for watching Yankee Stacking. I get this question a lot. Yankee, when are you going to stop stacking silver and gold? Well, the easy answer is never. But while that may be true, it doesn't really explain why. So I'm going to give you the harder answer in this video. Now, I've talked about curtailing my purchases of certain types of gold and silver, stuff like 90% silver when I reach a certain amount of this stuff. And I've talked about when one should probably stop stacking fractional gold coins and move on to the 1-ounce gold variety. But when do I stop stacking silver and gold entirely? Well, I'm going to give you my 3 requirements before that ever happens, and I'm going to enlist the help of Alastair Still, CEO of Gold Mining and a sponsor of this video, to help walk through them with me. Spoiler alert, none of these 3 criteria exist right now. And frankly, they are very unlikely to ever happen. So try not to laugh as I go through them.
Hey, super to be back. Thanks for having me on again today.
Well, thanks for joining me again. We're going to do something fun together, all right? As you know, I'm a passionate silver and gold stacker. I'm building my precious metals position physically quite hard. But a lot of people ask me, when am I going to stop or at least curtail my gold and silver stacking? So I'm going to give my 3 requirements for when that could possibly happen. And would you give me your take on each of those?
Absolutely. I'd like to hear these, sure.
All right. So the first one is that the U.S. would have to significantly reduce our national debt. We just surpassed $32 trillion in sovereign debt. By the way, that's like a $250,000 charged to every taxpayer. But if we were to start running our federal government without deficits, balance our budget, that would be one big step towards me calling it quits on my gold and silver stacking. What do you think of that one?
I think that is such a stretch to even think that that might happen. And let's be frank about this. The whole world is running on debt right now. And even if you look at some of the trends, I know I've read some research lately, and it showed that back in the early 80s, the global debt to GDP was running at about 100%. That was the early 80s. Today, that number is closer to 350%.
Oh, my goodness.
So we are nowhere close to reining in debt. It is something that has become ingrained, and I don't know how to move away from it because it's such a entrenched part of how not just the U.S., but globally, other countries, corporate, and even at personal levels have all risen dramatically over that time period.
It is global, and I think there's like $305 trillion in global debt right now. We're also dealing with $3 quadrillion in global derivatives and unfunded liabilities. And here's the
really
funny thing. Isn't that incredible? Well, here's the amazing thing, though, Alastair. There's only like $2 trillion of gold supporting both of those crazy numbers.
Well, that's certainly one of the key reasons why I have always been a gold bug. It's a physical asset. You can put your hands on it. It's not made up of zeros and ones. Doesn't disappear overnight. There's not going to be a new gold creation machine coming out tomorrow. There's a finite amount that's ever been put on this planet. There never will be more. So it's a limited supply. That's what makes it scarce. That's what makes it rare. That's what has made it for millennia such a great store of value.
Well put. Second reason why I might stop stacking gold and silver is if there were no or negligible inflation. So, Alastair, central banks have the audacity to want you and I to spend more each year on the things that we need. They want inflation. Shoot, they cause inflation. Isn't that right?
Absolutely. I mean, this is such an entrenched part of our society, and we
Yeah.
have seen perhaps the peak of inflation. I would think that's fair, and we certainly could not sustain the levels of inflation we've seen over the last 6 to 12 months. We all see that when we go to the gas station or the grocery store. That was extreme, but regardless, it's still very high levels of inflation. So if one of your requirements is negligible or no inflation, that box is not going to be checked anytime soon.
I'm asking too much, huh?
But look how the 2 points are so intertwined as well. I mean, what's been the central bank's key tool to stop inflation is to raise interest rates. But going back to your first point, with such a huge debt level, you cannot keep raising rates because countries, currencies have shown there's not the capacity to go further. They're already at incredible debt levels. So a further increase of rates really is not manageable. It's not sustainable.
It is a true catch-22. Before we get to the last requirement, as far-fetched as it might be, Alastair, for me to stop stacking, let's talk about your company for a couple minutes here, Gold Mining Inc. And guys, what we're about to talk about here is not stacking physical gold and silver. It's a leveraged, speculative investment based on where I personally believe the price of gold and silver is headed soon. So I own a lot more of this stuff than I do all my junior miners combined. But Alastair, catch us up on what's happening at gold mining.
Well, gold mining, as you say, is in fact very much a great leverage play to the price of the metal. We have seen over the past cycles when the price of gold has risen perhaps 10, 20, or 30%, the leverage that Gold Mining Inc. provides to the price of gold has been multiples higher than that. We've seen 3, 4, 500% returns during similar swings in the price of gold. And we have some information on our website at www.goldmining.com where you can see some of those graphs. So first of all, there's a leverage to the price of gold. And really what that leverage is a resource base of some 23 million gold equivalent ounces.
Wow.
They're all within the Americas, good, solid, stable jurisdictions, underpinned by a very healthy balance sheet with experienced operators who've worked for major mining companies, major producers like the Kinrosses, the Newmonts, the Goldcorps. So a strong management team, big resource portfolio with key projects in the Americas. It checks a lot of boxes, and there's some exciting new developments that we've been working on and just around the corner as well.
Cool.
So the first of those, I think,
what are you most excited about, Alastair?
We talked about a couple of months ago now, but we completed an IPO, a launch or spin out from our portfolio of a project we had in Alaska called U.S. Gold Mining Inc. That has been a tremendous success, and what that's created for us now is some $120 million at the time of this recording on our balance sheet, the value of those shares we own. And if you take the value of those shares plus the shares we own in Gold Royalty Corp, which is a company we created 2 years ago, add in our cash and a few other equities, you now have a value of those assets more than the entire market cap of our company.
Wait.
So what does that mean? That really means that if you're buying Gold Mining Inc., you're paying market value for the cash and the investments, and you're getting 23 million gold equivalent ounces essentially for free. So a free optionality on a portfolio of assets, multi-million ounce deposits throughout the Americas. That is a tough to beat proposition for a junior mining company.
Alastair, wait a minute. The last time you and I talked, you said your gold resource was effectively worth $1 an ounce. Are you telling me that it's negative now?
It's essentially now gone negative because we've increased the value on our balance sheet with the shares we have and our equities and our cash position, so that it's even stronger value now because we've solidified and crystallized value from the portfolio. So those remaining 23 ounces is such a strong leverage play, such great optionality for an investor in Gold Mining Inc.
That's fantastic. Stackers get all excited about gold hitting, $2,000 an ounce, $3,000 an ounce. I can't imagine the upside potential if that ever happened. It would be amazing. I'm glad I'm a shareholder, Alastair.
well, absolutely, and we all will benefit, the stackers and the equity markets, if a price of gold rises. That's not one thing we can control. We'll be beneficiaries to, but what we have control is our own portfolio and unlocking value for it. So catalysts coming up on the horizon, a couple of key events coming up. We've launched the resurrection of our camp at Whistler, and drilling will be starting by U.S. Gold Mining Inc., where we own over 80% of that company. So that drilling should start in August. It's a deposit that's almost 10 million gold equivalent ounces in Alaska, great jurisdiction, hasn't seen the light of day in more than 10 years. So it's a great rediscovery as we grow and strengthen that asset. And as well, within the next month, we're planning to release the results of a preliminary economic assessment on our La Mina project in Colombia. We started that earlier this year. We said we'd have it ready around mid-year, and we're coming to the final stages of that now. So that study will show the economics and how we can demonstrate the viability of that resource, that new discovery that we drilled last year, made a discovery in Colombia.
Great update. Thanks for that, Alastair. Okay, now for the final requirement for me to stop stacking. You ready?
Yeah.
Number 3, we no longer debase our currencies. I would love to see a return to sound money. Whatever currency we use, whether it's paper or digital, whatever, it should be backed and redeemable by tangible assets that have real intrinsic value, like gold and silver. Do you see this happening?
Well, it goes back to some of your earlier comments. There's only so much gold and silver to go around. There's clearly not enough willpower for the governments to back currencies. So what is underpinning those currencies? That's a big question. I know that when I have a tangible asset such as gold or silver, it's a store of value. It's not going to disappear overnight. It will fluctuate like any investment. Sure, it might go up and down, but it's such an ingrained part of millennia. It's withstood every challenge that's been thrown at it since man's been on the planet and has survived. So I think this is, such a fundamental piece that is missing in many of the other forms of investment these days.
Well, here's the problem. I don't think it's going to ever happen. Because I think governments, they want unfettered currency printing as much as they want, whenever they want. You're right. I don't think all 3 of these are likely to happen. And I think I'm just going to keep stacking. I'm also going to keep holding my shares of gold mining. Thanks so much for joining me. This was fun.
Well, I'm glad that I wasn't able to convince you to stop your stacking.
You're not gonna.
I've done some stacking myself recently, and certainly adding to my own personal positions in Gold Mining Inc. as well. And as we've discussed and throughout, there's some key catalysts coming up. The fundamentals are solid, and if the price of gold starts moving, and when it has moved in the past, it tends to move very, very rapidly. So hang on to your socks and be ready for the ride.
All right. Well, I hope to have you on again, my friend.
I look forward to it. You have a great afternoon, and all the best continued stacking, because based on your criteria, I think it's going to carry on for a while. The Bellingham Airport is across the border, and as you do when you go down to Washington, what do you do before you come home? You stop at the local coin shop, and I bought another gold coin. So
Way to go.